Coming up today, stocks start the week on a positive note. Why Tesla is trading higher. The latest from the crypto world. Do we now have a White House put? NVDA earnings on deck. White oil is trading higher. And all the details on what my new trading service is. You don't want to miss this one, guys. Let's go. And welcome back to the Daily Market Review, everybody. Hope you had a great weekend. We're off to a good start here on Wall Street. Pretty much finishing the day high across the board, except for the Dow Jones Industrial, finishing off just a touch there. We were led higher today by tech shares. Going into the most important event of the week, NVIDIA's earnings this Wednesday after close. They're expected to report 74 cents in earnings per share. The market pulling back the last couple of days going into it. Are we going to get the next big thrust up, gap higher, new all-time highs, closing above $150 a share for the first time ever? Or are we going to get a surprise gap down? All indications point towards they should beat on Wall Street analyst expectations. It's just how the market reacts can be a different thing. But more on that a bit later on. Along with the bump up we're getting in commodities today. Nice push off support here for crude oil. Gold having a bit of a bump up, helping junior gold miners to be the best performing sector today. Up almost 5%, bouncing nicely off last week's lows. And stick with me today because later on in this video, I'm going to reveal what my new trading service is to you guys, along with all the details on it. And I'm sure you'll find this really interesting. So hang around for that a bit later on. But first, let's just dive into the biggest stories and what's really moving out there today and what people in the financial community are talking about. We've got Tesla off to a strong start once again, pulling back a bit last week on news the new incoming administration will pull back the electric vehicle regulatory credit of $7,500. We now just got news over the weekend. The new admin could ease self-driving car regulations and prioritizing a federal framework for autonomous vehicles. So like we said last week, the pullback of those EV regulatory credits hurts Tesla's competition more than Tesla itself, as they have by wide and far the best operating margins in the EV industry. And so currently the existing federal rules are strict about car manufacturers' ability to sell large quantities of vehicles without steering wheels or pedal. Obviously, this is a new industry full of risk, so regulators have been careful with due cause in allowing the rollout of autonomous vehicles. However, the new admin may look to unlock those regulations and actually get behind the industry to become a world leader. And so this is something that's going to play out over the next couple of years. And like Dan Ives of Wedbush said, Elon Musk's all-in political bet was a poker move for the ages. Sharing the same sentiment, Gene Munster, he said the likely loss of the 7.5K EV tax credit is chump change when you compare it to Tesla capitalizing on its autonomous future. And now with the new leadership planning to make regulating self-driving vehicles a top priority. And so there's a look at Tesla today, up 5.6%, quickly getting back to last Monday's highs. And just looking at the monthly chart here on Tesla, we're not all that far off all-time highs. Big key resistance zone around 360s all the way up to 410. So net, the new US leadership looks set to greatly benefit Elon Musk and all his companies, including Tesla. The jury's still out on Uber, of which I recently became a new long-term investor in. Shares have since pulled back since I initiated my position, of which I've been picking up a few more shares. I see a world where they can both succeed, Tesla and Uber, in robo-taxis, autonomous driving. In fact, they may actually partner up together. Uber may actually buy Tesla cybercabs, robo-taxis, and use them as their hardware, and Uber's a software platform. They're much more experienced, entrenched, with more infrastructure, logistics, and already present in taxi markets around the world. So they do have a leg up on Tesla on actually running a taxi business. However, Tesla will have the advantage of them by owning the hardware. So net, I think Tesla does have a bit of an advantage. However, I wouldn't rule out Uber either, because they could buy robo-taxis from other manufacturers, but I also think having positions in both of them kind of hedges myself a little bit if we do get a clear winner in what's likely to be a huge industry of robo-taxis. Once that comes into full swing, can't really see it going away. And like most of these industries, they'll pretty much be dominated by 2 or 3 players. What's already massively benefiting from a new incoming admin, cryptocurrency, with Robinhood poised to be a major beneficiary. We could get some changes to securities laws. Gary Gensler from the SEC looks to be on the way out, and the government and all the crypto hawks currently in government are looking to be getting replaced by crypto bulls. And it doesn't appear they've just done this to win the vote. It's looking like they're absolutely serious about getting behind crypto and making the US the world leader. And the market has certainly come back to Robinhood shares. Once again today, up 8% on huge volume, really strong uptrend here. And there's a look at Robinhood on the monthly chart. Appears to have bottomed out last year, and we're turning up sharply here. We also just got news. The incoming president met with Coinbase CEO Brian Armstrong today, which again is a strong sign of the new admin's embracement of crypto. And Coinbase could indeed play a very big role in the US's leadership in this space. Government may actually use Coinbase to transact and potentially even custodian some of their holdings as well. Coinbase having another great day, up 6.4%. We also just got more news. MicroStrategy just bought another 51,000 Bitcoin for $4.6 billion as Michael Saylor continues to buy as much as the market will allow him. We also heard Mara planning planning to acquire more Bitcoin, Semler Scientific, and Metaplanet, along with one of the world's best hedge fund managers, Paul Tudor Jones. It was revealed today his fund holds $230 million of the BlackRock Bitcoin ETF, IBIT, and he's a big Bitcoin bull. Along with commodities, we recently heard from him. He doesn't own any bonds, is worried about the US government debt situation, potential return of inflation, and it's looking like the BlackRock Bitcoin ETF is going to have options trading on it starting tomorrow. And this has already broken records for the assets under management and how quickly it's growing. $43 billion just launched earlier this year. Already overtaking the BlackRock Gold ETF, IAU. And there's a look at IBIT, trading pretty firm there. Heavy volumes these last few weeks. Now we've got options coming. I'm sure a lot of investors and traders will appreciate that. Current holders of IBIT now have the option of writing some covered calls or potentially cash secured puts. And that should just add to the liquidity of this fund and the amount of traders and investors that can now easily participate in Bitcoin and crypto. Just looking at the underlying, still hovering around all-time highs, just above 91,000 a coin. And like I said, there's nothing really stopping this from continuing to melt up. The only real thing that could knock it over is if the whales start offloading a lot, as it is one of the most highly concentrated ownership assets in the world. But investors are just piling into it here, looking at crypto fund flows, absolutely off the charts. With a new record last week, and now we're also just getting news, the incoming president's social media group is in talks to buy a crypto trading venue. Truth Social is close to an all-share takeover of intercontinental exchanges Bakkt, which again is just another sign of how serious the new admin is in embracing crypto. And so Bakkt, which was created by ICE, who are also the owners of the New York Stock Exchange, still hold a 55% interest in it. And there's a look at their website here. Custody, trading, and on-ramps for crypto. Licensed and regulated turnkey solutions. See why businesses choose Bakkt as their end-to-end crypto infrastructure provider. Licenses to operate in all 50 states, US regulated, and this stock's actually listed on the NYSE. Monster move today, 162% on 7 million shares, still trading up after hours as I speak on this news that it may be getting taken out by Trump Media and Technology Group. It's not just crypto that's been on fire since the election, space stocks also catching a strong bid, likely to do with Elon Musk and his new bestie, the 47th president, in which we may actually see the SpaceX IPO in the next 4 years. And just like crypto and autonomous vehicles, it too may have a very powerful political and regulatory tailwind that allows the US to accelerate its leadership in the booming space industry. Stocks Rocket Lab, Intuitive Machines, Spire Global, Planet Labs, Redwire, and AST Space Mobile, all in very strong trends over the last week or two. But it's not just the new incoming admin that many parts of the market have been warming up to. Like BlackRock's Chief Investment Officer, Rick Rieder, says, there are no sellers in the equity market. He thinks stocks can keep charging higher despite stretched valuation. Said if there's no bad news, geopolitics, the natural migration is to higher prices. Momentum is abundant, even in the face of persistently higher rates. Just said there's so much money coming into stocks, companies buying back their shares, and I'd agree with them. Unless we have a real catalyst or surprise, big uptick in either inflation or the unemployment rate, something else, this market should keep chugging along until we inevitably do get that surprise and bout of volatility, which I think could be induced by tariffs, potentially in Q1 next year. And I agree with what Thomas Lee of FS Insight said on X today. There is now a White House put, meaning Trump doesn't want markets to stay weak. This, along with the Fed put, supports a Thanksgiving rally. And so it's true. Just looking at the S&P 500 weekly chart here, I'm sure some of you may remember 2018, back in Trump's last term, market was selling off really hard. Going into that, bottomed out in Christmas, where Trump famously said there was a glitch in the stock market, as he would quite regularly commented on it and let us know anytime it hit a new record all-time high, something he was very proud of. The market did actually rally really hard off that bottom. 2019, things were roaring right until we got COVID, which changed everything. And so Tom Lee's right. The new president regularly watches the stock market. He doesn't want to see it crash under his second term. Not to mention the Fed put. And even though Jay Powell is turning a little bit more hawkish of late, he still indicated if anything were to go wrong, he'll be there the next second with his printer fired up, ready to go. And like Rick Rieder says, unless we get a real catalyst or surprise, the market should keep just bumping along here. Market's also looking for confirmation of who's going to be the next Treasury Secretary. Very important role after the Fed that probably has the most impact on financial markets. Current Secretary Janet Yellen, a vocal, outspoken critic of the incoming president, has said she's done, and like her, they can have big effects on the market, in which she's faced widespread criticism for front-loading the US's debt book with heaps of short-term debt, potentially skewing the bond yield curve, not to mention setting up a huge long-term interest expense. From failing to sell a lot of debt back when rates were under 1% in COVID. The Treasury pick could also give an indication on tariffs. And just looking at the latest odds on Polymarket, they're pricing Kevin Walsh as the likely next Treasury Secretary. Otherwise, it could be Cantor Fitzgerald CEO Howard Lutnick. Scott Bessent was also up there as a potential frontrunner. So we should hear news on this over the next day or two, potentially later this week. Then whoever he picks, we'll take a look at where they stand on some key issues and what we should expect from them. Otherwise, we don't have a whole lot in the way of economic data being released this week. Market will really be looking towards NVIDIA's earnings, likely to sway the market and see whether we can put a floor in the semiconductor sector, bumping around a lot these last few months. With chip trade having pulled back, still got other AI stocks like Palantir doing well. The market's attention has turned to more other areas, small cap growth, nuclear, quantum computing, space, mega cap tech's kind of taking a bit of a back seat here. And the market will really be looking for early indications of how their latest generation Blackwell chips are performing, in which we just got some news out today that they're overheating in servers, in which they may face further delays, in which NVIDIA said they're working with leading cloud service providers as an integral part of our engineering team and process. The engineering iterations are normal and expected. So these GPUs are so powerful, they're overheating the server racks. And I doubt this will be a material issue. Certainly would upset the market. We also just got news from Supermicro, having delivered direct liquid optimized NVIDIA Blackwell solutions. And Michael Dell posted yesterday on X, they're now shipping the latest NVIDIA powered server racks. The AI rocket just got a massive boost. And there's a look at Dell shares, been bouncing back the last couple of months. Supermicro getting a much needed bounce today, up 15%, actually trading up very strong after hours as I speak right now, post-market. Looks like we just got some news in. Supermicro will submit a compliance proposal to NASDAQ by Monday to avoid delisting. Been a real worry in the market of late. They haven't been compliant, so that's obviously spooked the shares a lot, but looks like we're getting a bit of a nice bounce here today. And like I said, the semi sector as a whole been pretty much consolidating ever since March now. Ripped up in Q1, kind of stalled out on these big bearish engulfing candles, and we'll be looking to see whether NVIDIA can set off some clear direction here. But they could get caught up in a nasty trade war with China. China wanted to enact their leverage, could blockade Taiwan. Don't think they will, but they could. And the price of electronics and other things in America may indeed be about to go higher. Thinking about getting a new flat screen TV soon? You may want to check out some Cyber Week and Boxing Day sales. Could be your best bet, because those, along with other discretionary items, mostly manufactured in China, along with other parts of the world, could be about to uptick in price. How this all plays out in the semiconductor chip industry is still yet to be seen. America is on a big campaign to bring chip production back home, with the CHIPS Act helping out Intel along with Taiwan Semi to build more manufacturing bases in America, and these tariffs will very well incentivize the same thing as well, domestic production, as the economics of importing are about to change and potentially big time. And it's just kind of amazing to see American exceptionalism, massive outperformance of the US stock market over the last 20 years, flourish in the face of ballooning regulations. Currently over 180,000 pages in the Code of Federal Regulations. And like I've been saying, maybe American exceptionalism is about to accelerate on the upside if regulations do indeed top out and come down. Remember, the less rules there are, the easier and cheaper it is to do business. On top of less regulation, how's big government spending cuts going to play out? Vivek saying today, a reasonable formula to fix the US government, Malay-style cuts on steroids, which Argentina President Javier Milei has already done a fantastic job, not quite 1 year in office, significantly bringing inflation down, boosting global investors' confidence in his markets, repatriating capital, and that's why Argentina is the best performing international stock market this year, having another great day today, up 3.8%. With my Argentinian stocks, some of my best performers this year. And even after this rally, still look to be good value. However, like every investment, it's not without its risk and uncertainties. Bank of America citing 3 risks that could derail this market's sugar high. First, they still see the possibility of an economic recession, which would obviously significantly undercut earnings growth. So as usual, we'll be keeping an eye on the unemployment rate. That starts going towards 5%. The odds of a recession greatly increase. Also, retaliatory tariffs. What's China going to do in response to US tariffs? Will they bite back, or will they just sit there and take it? Third, if bond yields keep ripping higher, the cost of capital keeps going up, that just squeezes corporate EPS, for which the stock market doesn't seem to mind too much at this point in time. 10-year getting up to 441. However, we take out those highs from late April, we start getting towards 5s, that'll most likely put some pressure on stocks, as it's just more easier for investors to earn a safer yield in money market funds. And just keep in mind, the biggest companies in the world are extremely big at this point of time. The weight of the top 10 US companies in the world, 21% of the entire value of the global global market cap. It's incredible. And that for sure definitely skews the S&P 500 and NASDAQ when looking at it technically and on valuation metrics as well, for sure. We're up there in the top deciles when looking at a lot of valuation metrics. But like I've made an argument before, I think valuations go higher over time simply because investing in the past was a lot more risky. Investors deserved a bigger premium. Just like the secular trend for interest rates to come down over time, because lending to people 50, 100 years ago was a lot more risky. Can't track people as easily as you can nowadays in the digital age as you could back then. So again, financiers would need a bigger premium to compensate for that risk. However, that doesn't mean these valuations and metrics won't revert to the mean at some point. But like I said, when looking at the S&P and NASDAQ, it's really been skewed just by a handful of companies. There's more out there in the world to invest in than just the top 10 companies in the world, many of whom charts don't look anything like this. Some of them look more like this. But in addition to tariffs and the unemployment rate, we'll also be keeping a close eye on potential upticks in inflation, which I think at this point in the time is more a likely risk than recession, which doesn't seem to be right on our doorstep just here. But inflation could be. Tariffs could indeed be inflationary, at least while the system and market swallows it. And since the Fed has pulled rates back, things will be watching for signs of increasing inflation. Cost of labor, latest print 3.4% year over year in the third quarter. The relationship between stocks and bonds. Currently stocks and yields, positive correlation. And what's probably a sign of the market pricing in stronger economic growth ahead. However, if stocks come down and yields hold up, that's a sign the market's pricing inflation. So like I said, we'll be keeping an eye on the 10-year. If that starts going towards 5%. And just economic momentum in general. Animal spirits, well and truly alive. We can see that in crypto. Small caps. City Economic Surprise Index, tracking higher. A lot of economists expect GDP to continue growing at around 3% next year. But just keep in mind, there's Main Street inflation and there's Wall Street inflation. A lot of consumers already struggling under that structurally embedded inflation over the last couple of years. And I'd say is the biggest reason as to why they flipped their leadership. However, Wall Street's more excited about disinflation, the pace of inflation coming down, which it has been. And while I think we may bump around these mid-high twos, if we were to see a clear breakout in CPI, make a high into the mid threes, that could be potentially another headwind for stocks, but a tailwind for commodities. And that's why commodities are a great hedge to have in your portfolio. I always have a little bit, and when we're uptrending, I naturally add more in there. It was interesting to see today crude oil defending a key support zone, bumping up after, unfortunately, we're getting news the US has approving Ukraine to use long-range missiles inside Russia. Even though the current admin doesn't quite have 2 months left in office, the new incoming admin already appeared to have started negotiations. We can't rule out the risk this could spill over before the new admin actually gets in office and they can actually make some decisions. The weekend decision by current President Joe Biden to allow Ukraine to use US-supplied long-range missiles to strike deeper inside Russia, which is among the world's largest crude producers, and which Russia's already warned US to stop adding fuel to the fire with long-range missiles. Certainly interesting situation at a most definitely interesting time, in which if Ukraine actually goes ahead with this, Putin may be obliged to respond as well. And there's a look at crude oil. Big bullish engulfing candle today, continuing to defend the $66 a level area and actually holding up pretty well considering the dollar's strong march over the last couple of months. But the whole commodity complex caught a strong bid there today. There's platinum up over 3%. Natural gas continuing to trade near multi-month highs. Nice bounce back in uranium today, along with agriculturals, wheat, corn bumping up. There's sugar and coffee actually breaking out to a new yearly high. And overall, the agricultural fund still consolidating, but we are pushing up against this big key resistance zone, which again, if we break out, means the cost of our food is likely to go up over the coming months, along with inflation, especially if crude starts ticking back up into the 70s. However, I wouldn't rule out crude taking out the support zone either, as world production is at all-time highs. And if China doesn't bounce back, all the wars in the world do get resolved when there's no reason crude can't actually go down into the 50s. And that should be a tailwind for stocks if we've still got economic and EPS growth. And just moving on to some of the hardest hit stocks on Friday, after we got announcement of RFK heading up the Department of Health, biotech pretty much trading flat there today, as are some of the big drug stocks, Pfizer, but also a little soft, the snack makers, Pepsi, Conagra Brands, Kraft Heinz. These stocks trying to find support after being beaten down the last few weeks, which, like I said, could give a bit of a tailwind to more health-conscious stocks. Wellness, fitness, and quality food makers. Stock I've got on my watch list. Simply Good Foods Company, SMPL, trading pretty strong the last couple of weeks. They're into making more healthy food snacks. Could think of them as like a health-conscious version of some of the others like Pepsi or Mondelez. Along with America's largest gym operator, Planet Fitness, a couple of thousand outlets all across the country, it too trading really strong after their last earnings and just going out to a monthly chart, looking pretty good on the long term here, pushing up to all-time highs. After consolidating quite a few years, America's going to get healthy again. Some of these stocks could play a key role in that. Also interesting to see some activity in some renewable clean energy stocks today, like fuel cell energy. Quite a bit of volume and activity here, up 31% today. Another fuel cell stock, Bloom Energy, having another good day on volume. And former high flyer Plug Power, trying to defend these levels after the stock's been smashed down the last couple of years. We've still got the nuclear trade on fire. NuScale, SMR, up 18.5% today. Uranium Energy Corp, thanks to the move up in uranium today. And these EV toll stocks, Archer Aviation, still ticking higher. Having a bit of a pullback today, quantum computing, IonQ and quantum computing, pulling back after their highs last week. Another former high flyer from the 2020 market, Block, formerly Square, SQ, trading up nicely today, just going out to a monthly chart. Similar look to a lot of these high-flying growth stocks I've been sharing with you guys of late. Putting in these long, rounded bases, pushing up against resistance zones. Some of them are already broken out. Carvana's been the best, but could be coming back to life here. Same with Roku. Still putting in a base, still a bit off these highs, but nonetheless, another similar look from these high flyers. Okay, as promised at the start of this video, I'm excited to reveal to you guys today what my new trading service is that I'll be releasing this Thursday. And like I said, this was based on the results of the survey I sent out to you guys about a month ago, in which I said back then it was overwhelmingly clear what most of you guys are interested in. In fact, over 55% of you said you're interested in swing trading alert. And just speaking with ChatGPT on all the text-based answers you guys entered as well, made me realize more of you than I realized are interested in swing trading. And hence why ever since then, I've incorporated more swing trading content into the daily market review. And I will occasionally share some of my swing trading ideas for free in the daily market review, just as I have done over the last couple of weeks. However, for those of you who are wanting more, and you want a structured professional service, well then like I said, I'm opening the doors to my swing trading alert service this Thursday. And just like I learned from all the feedback in the survey, you guys love the transparency of my stock pick service, the fact that I give out my picks before I actually trade them. And so I'm doing the exact same thing again for my swing trading alert service. I've created a brand new trading account, in which I'm also going to run another $1 million challenge. And so all my trades and records will be 100% transparent for paid members to see. And I'll give you a bit more details on that in a minute, but just a bit more about the service. Just like my stock picks, all the alerts will be sent before I actually make the trade in my real money account. In fact, they'll be sent the night before, and so there's no need to be in front of the screen all day or during market hours. Again, what you guys told me in the survey is you're into trading stocks, but because of your job or you're with your family or running your business or whatever, you can't be there in front of the screen all day, and so real-time alerts don't make sense. And so that's why I created this service, as you guys made it clear to me this is what you're after in the survey. I was actually a little surprised, as I thought most of you were just into longer-term investing, which many of you are. However, plenty of you are into swing trading like myself, and you expressed interest in the comments of wanting to get more swing trading ideas from me and in a structured service as well. So I'm required by law to say this swing trading service is not financial advice. It's designed to demonstrate successful swing trading to you by following my real swing trading account day by day. And so what you do with your own funds is totally up to you. I'm just here to help you learn by real life demonstration. And so just a bit of a comparison of my stock pick service to my new swing alert service. And so both strategies work very well together. In fact, they perfectly complement each other. I think of my stock picks as the bread of my investing and my swing trading as the butter of my investing. And just like bread and butter, my stock picks and swing trading go great together as well. So my stock pick strategy, to use a baseball analogy, I'm really going for home runs, going for big returns, stocks that can deliver 100% or more in less than a year or two. However, my swing trading is more going for base hits, those kind of 10-20% moves in under a month or so. And so for my stock picks, I use a trend following strategy, typically buying stocks that are going up, and I seek to ride them for as long as I can, as long as they keep going up. Whereas for swing trading, my strategy is mean reversion, looking to buy the dip while a stock is going down and to sell it a few weeks later after it's had a bounce back. And so for my stock picks, I mostly invest in small caps, typically younger companies, lower priced, that have big potential to appreciate. Whereas for swing trading, I'll only be trading liquid large caps and ETFs, which, as my testing has shown, work a lot better for mean reversion, and small caps work a lot better for trend following. And there's actually really good diversification effects for combining trend following and mean reversion. Creates for much smoother overall performance. And so my stock picks is more active investing, average hold time 6 months, where swing trading is more short-term trading, average hold time 3-4 weeks. And like I said, they complement each other very well. And so who is this new service for? Well, if you're an active stock trader, you're interested in trading USA listed stocks and ETFs, then this service will be of interest to you. And even though I've got a lot of large traders and even small hedge fund managers that watch the daily market review, while I do appreciate you guys watching my content, and I've spoken with a few of you, this service is strictly for retail traders and those with less than $50,000 in a swing trading account. So if you're a large trader, fund manager with millions of dollars, like I said, I appreciate you guys watching my content, but please don't join this new service. And I do have ways of monitoring for that, which if I see a really large trader following, I will have to respond and potentially make some changes. But like I said, this is an educational service for those that are willing to learn more. Whether you're new or experienced to trading, stock traders of all levels will find value in this service by following a real-life swing trading strategy in action. And that's the difference between this swing trading alert service and the hundreds of other trading memberships you see everywhere all online. Trading rooms, Discords. I can't see any other one that's giving you the swing trading alerts in advance and then actually trading it in a real money account afterwards and keeping a track record to be followed. It's all vague ideas given in real time after the fact. And if they do have track records, it's really murky or unverifiable. There's no screenshots from a real trading account. And in my honest opinion, most of it's pretty much just straight up BS. And I think it should actually be a law. If anyone's going to give alerts or picks, they should have to actually trade them with their own money account. But anyway, like I said, that's what makes this one really different from all the others out there. And what you guys told me in the survey, you love that transparency in my stock pick service. The fact that I actually put my money where my mouth is and buy all my picks after I've sent them to you guys. So I'm going to do the exact same thing with my swing trading alerts. And it's run in a very similar structure and format to my pick service. All alerts will be emailed to you at 9:30 p.m. New York time, the night before the alerts are to be traded in the market. That's a full 12 hours before the market opens, giving everyone plenty of time to see the alert. And if you want to follow it in a paper trading account or whatever, then you'll have time to do so. Just like the stock pick service, there's a private members area that you'll get access to. You can see all my current open trades, 100% transparent performance tracking, a video giving you details and insight on my swing trading strategy, and I'll also be posting my trade screenshots straight from my brokerage account in there. And there's also a position sizing calculator that I'll be using. On the first of every month, you'll get a monthly report on how my swing trading account is performing, along with some commentary on the market. And like I said, like my picks, there's no filler, there's no BS, there's not hours and hours of useless work and info. It's just straight down to brass tacks, telling you what I'm about to trade and keeping track of the performance so you can closely follow along. And so just a few details of my swing trading strategy for those of you who are interested. Like I said, I've designed this strategy based on the survey and what you guys told me. You couldn't be in front of the computer all day in front of the screen. And so for this new account, I'll be entering all my orders in at night. There is a little bit of work to do, about 10-15 minutes a night to enter and adjust orders. But like I said, it's done all the day before they're to be traded. So for this strategy, I don't have to be in front of the screen when the market is open. And it doesn't have to be done at a particular time at night. I just have to enter and adjust my orders at any time before the market opens the next day. And like I said, I'll only be trading liquid large cap stocks and ETFs, instruments that trade at least $50 million a day. And I won't be doing any shorting, no derivatives, and no leverage. All my swing trades are long only and trading a wide range of assets. Like I said, I place a big emphasis on always carrying a diversified portfolio. And so for this account, I'll be running a semi-systematic strategy. So my swing trading strategy is based on extensive testing of a proven strategy I've actually been working on for a few years now that I've modified for this new service. And so that largely tells me when to enter and exit. However, I'll be combining it with my discretion, just like I do for my stock pick service, to determine what trades are taken. So I always carry a diversified portfolio. And I don't want to give too much away here, out of respect for paying members. Like I said, there's a video in the private members area where I explain the strategy more in detail so all members understand exactly what it's attempting to do and why it works over the long run. I'll explain how I think of my swing trading as running a stock market insurance company and how I'm selling short-term volatility insurance. But again, that's just the way I think of it. Like I said, I'm not trading options. I'm not doing anything complex. It's just long-only stocks and ETFs. The average holding time is about 3 or 4 weeks. However, some trades can be open for 2 days. Some can be open for 2 months, or even potentially a little bit longer, as all my exits are systematic according to my strategy. And like I said, for members, I share some results of that inside the members area. And position sizing is a percentage of my account value given for all alerts. And so just to give you a bit of an idea of that, looking in the swing alerts, members area just here, there's been no trades just yet, so it's blank. But like I said, I do have a position sizing calculator that I'll be using to determine how many shares to trade. So for each alert, there'll be the stock I plan to buy tomorrow, the price I plan to buy it at, and what percent of my account I plan to put in the trade. So I can just use this calculator here, and for whatever price the stock is, it'll tell me how many shares to buy. And whenever my account goes up each day, I just use this calculator in the members area to determine how many shares to buy. And so let's just talk about my account goals for this strategy as well. Like I said, similar to stock picks, but a little bit different. With my stock picks, I started with $500 and and I buy $500 of a new stock every week, about $2,000 a month. For this one, I'm starting with a brand new account that I've already put $30,000 into, and I'm going to add $1,000 every month in contributions, increasing that by 10% per year. Now, this is not an absolute must. This is just a rule I have for myself. For all my portfolios I contribute to every month, as I believe dollar cost averaging and diversification are the only two free lunches in investing. And like my stock picks members know, I practice both extensively. In fact, I've even got my own formula for measuring how diversified my portfolio is, called Interportfolio Correlation, IPC, which for my current stock picks portfolio, my IPC is currently running at 0.15, meaning my portfolio is really well diversified. And each position has on average a 15% positive correlation with every other position, with currently 20 positions in my stock picks portfolio. And so through dollar cost averaging and properly practicing diversification, that's how you get that really smooth equity curve, keeping a portfolio of uncorrelated assets. And so I plan on doing the same thing for my swing alerts portfolio, monthly dollar cost averaging, as well as always keeping a diversified portfolio. And that's where the discretionary part comes in. I can use my global macro analysis to determine what trades to take and portfolio management to make sure I'm not too heavily exposed to one sector. And so that's been working pretty well for the stock picks account. Like I said, I started it back in June this year, and just in a simple return, even with dollar cost averaging, I'm already up over 20%, more than double what the market's done in that time. And so starting with 30,000 and adding another $1,000 every month, which like I said is not an absolute must, because with the position sizing calculator, it wouldn't matter if I made deposits, withdrawals, my position size will always be relative to the current account value. But if I do that and increase my contributions by 10% every year, so in a year from now, I'll be adding $1,100 a month. Year after that, it'll be $1,210, so on and so forth. I'll need a compounded annual growth rate of 24.1% to hit $1 million in less than 10 years. That'll be approximately $221,000 in my own contributions and $779,000 in profits if I'm successful. Of course, I'm not guaranteeing that. Anything could happen. It could take longer. Otherwise, I'm hoping I actually hit it sooner. But just to compare that to my stock pick service, my target for my stock picks is a compounded annual growth rate of a bit over 18%, which like I said, I'm already well ahead of thus far. And I know this is an ambitious target as well. However, like I said, I'm not trading hundreds of millions of dollars, and with small accounts, higher growth rates are possible. But just to set realistic expectations, of course, there will be drawdowns in the interim. My account's not going to go higher every month. I'm not going to beat the market every month. This is a long-term plan, a long-term goal, which I plan on sticking with until I trade this account up to $1 million, just like my stock picks account as well. Okay, now over to the pricing to join. The listed price will be $149 a month. Yearly will be $14.90. That gives 2 months for free. However, starting this Thursday and going for a week, I'll be offering 33% off for a limited time only. And just like my stock pick service, there will be a subscriber limit for this service as well to 300 members. And trust me guys, this is not a marketing tactic. I promise you, you will see this service close to new subscribers at some point in time. Just like my stock pick service is quickly approaching the 500 member limit I set on that, which will probably be hit next year, and that too will be closed to new subscribers. I want to ensure everyone gets a quality service, and therefore I'm limiting membership to 300 people only. So make sure you come back to the Click Capital channel this Thursday inside the daily market review. I'll give you the coupon code to save 33% off, along with the link to get in for anybody who's interested in following and joining my swing trading alert service. Like I said, you'll be following my real money account, and I'll be sending out all the alerts before I trade them the next day. And in the meantime, if you've got any questions, you're welcome to drop a comment below this video, or you can send an email to me at support@clickcapital.io, and I'll be happy to answer any questions you've got. And make sure you come back to the channel tomorrow, and I'll answer those questions for you in the daily market review and share some more details. Otherwise, I'm really excited to kick things off this Thursday. I'll be sending my first alert this coming Sunday night to start trading next week. And I think for those of you interested, you're going to learn a lot by following this service, and you're really going to enjoy it, just like all the great feedback I've got on my stock pick service, which has been doing really well so far too. Otherwise, that's all for the daily market review today. Thanks very much for tuning in, and I'll be back again this time tomorrow as usual. Cheers.